Okay, let's see how this goes. I'm using a headset microphone this time because the sound quality on the new, more expensive webcam that I bought is actually horrendous. And my old cheaper webcam had much superior sound quality. So I've placed the microphone quite close to my mouth. I did a quick test. Now you get to hear every cough, every sneeze, every burp, every hiccup. Which of course what we all want to hear. So anyway, crude oil. I'm long crude. And the reasoning being, well, let's maximise price and let's zoom out and let's examine the rationale for this. So if we go to the monthly chart, we can see, and if you're thinking, well, my goodness, there's a lot of lines on there. Well, yes, sort of. But they're all very important and they're all very long-term lines. And also, a lot of this chart can be stretched out to get rid of them. We're probably not going down to $20 again. Is that a fair assumption? So in any case, we can see we've got a quarterly line, a monthly line. If you go back far enough, it sort of fits in the gap between this price action here, cuts right through the middle of this mess here, captures this distribution, captures this the overside resistance of this, and then it's being hit from below, it's being hit from below, above, and then we came down one more time and gave it a little tap. In this whole sort of area, you can see the confluence area where we had the lower line on the yellow, the upper line on the yellow, we had the blue line and the blue line. So all of this area basically is a sort of confluence support on very long-term lines. It's also sort of the real mid-range, sort of kind of. If we say that, well, oil typically doesn't go below 40, it typically doesn't go above like 100, shall we say, except sometimes. But, you know, 90, let's say 90. And there you go, it's smack bang in the middle of sort of the substantial range, excluding the extremes. So what a great buying opportunity. And we've fallen, since the economies of the world reopened back up and oil went ballistic, we've fallen 50%. It doesn't look as impressive on these very long-term charts, obviously, and they're logarithmic, but 50% discount on a dwindling resource as the world economy opens back up and people are buying as much garbage as they ever have done. They're actually flying more. I read the other day that people are actually flying, going on foreign holidays more than they were before COVID, and that's even with the price increases, even with the inflation, even with pilots having heart attacks, that sort of thing. Or whether that was made to scare us, who knows. Yeah, so here we are. Here's the big box on the weekly. If we go down to the weekly, we can stretch out the charts a bit more. And this sort of head, left shoulder, right shoulder look, I mean, well, this is where I think judgment is important. You can't just say, oh, look, head, shoulder, right shoulder, left shoulder. Oh, this is terribly bearish. Look at this neckline. I.e., oil is going to collapse, and we're going to go, down, 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 down. It's not always that simple. And I know this illiquid, relatively speaking, price action here. And this could, of course, still happen, and maybe I should listen to the head and shoulders. But the point is, head and shoulders accumulation distribution, this can be reaccumulation. This can be another accumulation, and then up here there'll be another distribution, whether that's above 80 or above 90 or above 120, 130. Who's to say? It's all far too soon. But the point is, massive support. If we go on the weekly, we're getting a fading out. These candles getting smaller and smaller. Loss of momentum. We've actually got a crossover here and a crossover here on the RSI and the momentum of price volume trend. Weekly price volume trend has gone absolutely nowhere throughout this whole decline on the weekly, but it's far more important on the daily, I feel. Let's just maximise this on the daily. So there's our daily charts, and you see we got this channel, this slow sloping channel, and the same areas kept getting bought up. We had a new low, but then we've been buoyed. There's been a sort of a buoyancy ever since then, and we've never penetrated this closing low. from the 3rd of May. And instead what we've done is we've created this channel. And this time we came down and we didn't quite touch the bottom of the channel like we did here, like we did here. We failed once, we failed twice to touch the channel bottom. Then we went up to the channel top and we pulled back, and I was buying on these pullbacks. And then on this, look, so we moved up, and then we had another brutal pullback, right into 70-25, 70-30 area. And we've broken out of the channel. So we failed to meet the channel bottom. We went to the channel top, we pulled back, and we've sprung through. And of course this is exactly the kind of price action that precisely because it's exciting and can imbue you with hope that your long positions will, be uplifted to the heavens in price. This is precisely often when it will do something, it will disappoint, it will churn around, you get the red rail tracks, you get the blue rail track, and then the red rail track immediately back into the channel, or something horrible will happen, and it'll all be a terrible, nasty surprise, and it will be all very disappointing. But you've got to take what you get, and at the moment we're breaking out this channel. And if we look at the indicators, again, what was encouraging me to want to get long? Well, we were failing to make new lows in price. I mean, fair enough, we did here, but that was on a divergence. That was an equal low. We got a triple bottom on the momentum of price volume trend. And just as in price volume trend was channeling down, and again pulled away on this occasion from the channel low. Channel high, channel low, not quite channel high, channel low, channel high, channel low fail on triple bottom, on actually here triple divergence. And there was the breakout and retest. There was the breakout and retest yesterday, and we closed up and we closed above. I mean, yeah, it all looks pretty good. We've managed to keep closing above the 5 this whole time. This is the yellow dashed line, is the 5-period moving average. And this sort of gentle channeling action, this steady channeling action, which goes back further actually. Price volume trend has been continuously making new lows on the daily, and price hasn't cared basically. So that's a divergence between those two things. Price volume trend was making lower lows, lower lows, lower lows, lower lows. Price was not. So all was not as it seemed. So hopefully this is more than just a short-term indication, and the fact that we're getting such contradiction, such divergence between these indicators and prices, indicative that it will sustain something more long-term. And we might get a proper rally to 80 to 90 to, that'd be quite nice if it got up to 90. And maybe beyond, who's to say? Stocks. I've not looked at these for a bit. Yeah, so just like in dollar yen, in stocks, the divergence eventually came in. I had a go at selling. Have I got a dollar yen chart? I don't, but I had a go at selling dollar yen the other week. Just slightly early, ever so slightly early, and then gave up and got back into crude long. But the issue always is, okay, so we've had a divergence, we've had a down move. Is it played out? Is that it? Is that all the reaction we needed? I wouldn't like to say. I think if it can get over 4411, that might be a long trigger. But until then, maybe be presumptively down. Anything else worth looking at? So that's what I mean. You can hear me clicking my tongue. You can hear me breathing. I'm sure it's fantastic. Yeah, silver. So the dollar took a swoon, took a fall yesterday. That was quite dramatic. Yeah, you can see the divergence more obviously on this indicator. And what's that? Oh, that's a monthly line. Okay, so we hit a monthly line, which was also, again, these lows becoming these highs. On divergence, trendline break, backtest area would be 102.59, something like that. So we've got a nice move in silver. Stocks fell. Sheep a dollar would normally push stocks up, but they fell. And silver did this. It's better than nothing. It's in this channel. It came up challenge above 25 again. It broke out of this big blue channel, and then it just fell right inside. It tricked people. People thought they'd broken out. Back test, take off, but it didn't. It reversed. This was a distribution, and it collapsed again. Back down to 22. But on divergences, and now this is it's shorter term. Well, it goes back to April now. Medium term, I don't know. Yellow channel, and it needs to move up from here. If there's going to be any hope, basically, it needs to stay above 22.76, I would say. There's a lot of overhead resistance. If it can break out through the white and the red at about 23.33, 23.23, that 10-point range, then it could be go time. We could challenge these highs up here. We could come to 27, I think. At least up here is what I think. Crude, nasty gas. Dollar fell, oil up, nasty gas swooned. It swooned, it did. And there's the divergence again. There's the trend line break. There's the back test of the trend line break. Twice, annoyingly, for anyone who was trying to get in on that. There's the triangle breakdown. There's the back test. Yeah, so under 26. Ooh, let's say 26666. 2666. Let's say that's the over/under level. I would be short long biased. Oh, I'm so tempted to blow this dust I've just seen on my desk. That really would be annoying. Uranium. You ever hear the rumor that nuclear power is fake? But this could be a back test. It could be a back test. And who says they can't inflate and have a nice run in a nice fake asset anyway? Who is to say? So yeah, this was the very exciting, not long-term wedging action on RSI that I was following. And again, we were pulling away. We broke out. It was a high, but it was putting in then a reverse divergence on RSI, not on price volume trend momentum. We came right to the channel top. We spiked it. We fell back inside. We dumped out. And then we chopped upwards, and this looked like a bear flag. It looked like a channel that was going to break down, but it didn't. It broke up, and now it's back tested. So I mean, as long as we're above 2020, I would say long bias. I would be long biased. For the buy, I mean the alternative case would be under 2160 sell, I think. Bonds. Are bonds going to take another swoon, another dive? That would be bad for metals. You see, we put in the channel breakout divergences, but then we put in this reversal. It's tipped over the resistance at these lows that became highs, and it looks, I mean, this is ugly. I think this has an ugly look to it. Unless it recovers immediately, I think this is rates going higher again. Maybe 1, 2, 3, 4, a fifth wave. Maybe we'll come into all this business down here with my drawing tool. If my drawing tool will actually draw. Yeah, maybe somewhere down here. We won't go too long. I won't bother with ratio charts and internals and so on and so on. You can pretty much guess on the oil ratio charts. They've crossed over the 14 on positive divergences and so on and so on. And I'm not too fussed about stocks at the moment because I'm not looking to get involved and I can't be bothered. So let's keep it short and sweet. Bye bye.